Hi everyone, today let's talk about Walmart earnings. Then we'll take a look at the AAII Sentiment Survey, as well as the economic data. Then we'll take a look at the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Walmart did very well on their earnings, and they're comparing with Target here, which we talked about yesterday, was a bit of a mixed bag. They beat on earnings, missed on the top line. Their guidance was okay. We also talked about how they are currently being affected by a boycott due to their swimwear during Pride Month. And currently none of those things are affecting Walmart, who is also contracting a little bit, but they did very well on earnings, and the market respected that. And you can see that here. Target online sales dropped 10.5%. We talked about that one. Whereas Walmart went up 24%. They are still trying to compete with Amazon, who is the leader in the sector, but 24% is a massive jump for Walmart. Walmart Marketplace also increased by 14% in terms of buying items at the stores. And it does make sense that people are going towards the little bit more budget-friendly, more modest Walmart versus Target as we potentially prepare for a recession. Moving over to the sentiment survey, you can see this came out yesterday, and we were down at 35.9% for the bulls, which is quite a bit lower than what we've been seeing. Last week we were at 44.7, so big step down. We also had the bears stepping up to that 30% range. You can see that's almost back to the historical averages. We're typically in this 37% bull area. We're a little bit below that now. Bears right at the average, just a little bit below it. And the neutral sector is actually a little bit wider than normal. Definitely interesting to see those bears are coming back in force. Moving over to the economic calendar, you can see jobless claims came in slightly better than expectations. The previous read was revised up, which is not great. Trade balance for Europe doing fairly well. And Fed balance sheet, they resumed selling off their assets. You can see it's about a $60 billion step down, so a substantial step down. That's what we've been seeing more consistently. And it seems like last week was just a fluke on that one. Moving over to tomorrow, we got CPI for Europe. That will be interesting. And then basically nothing here for the United States. Moving over to Max Pain for the SPY, you can see it's down at 435. That's about 1% lower from current prices. Anywhere between 430 and 440 makes sense for the expiration. 435 right here, that's Max Pain. Would not shock me if we finished right in this zone, 438 to 439, so just $1.50 or so lower than current prices. Put call still at 1.8. Options reasonable here at 2.7 million. Not too much changed from yesterday. Moving over to the charts, starting off with the S&Ps here on the hour and the daily. You can see we hit that 21 early in the session, sold off throughout the day. Looked very bearish, hit that 435.88 area. So the Max Pain price target, not great. We're right at that Max Pain level now. You can see that level is breaking here after hours. Definitely interesting. Momentum and RSI still super bearish, super oversold on the hourly chart. I'm sure we're oversold on the 4 hour at this point as well. You can see this on the daily chart. Absolutely a falling knife. We did get to that highly traded zone. The question is now, is this going to hold? Are we going to see a bounce at least a little bit? Certainly interesting going into Max Pain. And typically the week after Max Pain is going to be a little bit bearish based on a move like this, in my opinion. But that'll be interesting going into next week as well. Moving over to the NASDAQ here on the hour and the 4 hour, very similar thesis, big move down, took out this level, moved all the way down to 357. I added a level here at 357.45, and that was based on this low here from 26 June, as well as this wick high from 5 June. Nice little transition point there. And I actually had a pretty wide range between 360 and 353. So this could have been a big cut, but we stopped right at that level based on this previous low, and I did want to add a level there. So it makes sense. Interesting level. Certainly looking for this to break as it continues to look quite bearish, but definitely something to watch. Moving over to the Russell and the Dow, you can see both of these accelerated to the downside. Same thesis, everything looks super weak. Next level on the Dow, 343.23. Russell right at a level, 183.28. And at this point, we're down about $15 from that most recent peak. So definitely a substantial move, about a 10% move at this point, almost. If we hit this next level, that'll be right at that 10% mark, which is currently sitting at 179.17. Moving over to Apple and Tesla on the daily charts, jumped out to the daily for today because everything looks super bearish. Big leg down. You can see Apple broke 176.15, sold off throughout the session. We're into this traded zone here now, right at 173.20, down a little bit after hours. Next level for me is 170.90. We also have the 144 EMA on the daily chart sitting at 169.78. Obviously, everything still looks super bearish. Oversold here now as well, hitting 27 on the RSI for the daily. Tesla also hitting oversold conditions, 28.82. Falling after hours, everything looks weak. Looking to move down to that 214 level. You also have the 144 here sitting at 210.33. Moving over to Netflix and Meta, you can see Meta had a big leg down, looking at 283.47 as a potential hold level. If this breaks, however, it is a long way to that highly traded zone, sitting down around 239. Definitely interesting to see that. Huge bearish momentum, huge bearish RSI. And then looking at Netflix, came into this trend line, candle break continuation. Definitely a traded zone here. You can see some consolidation. But next level for me is 392.92. And everything just looks weak. Took out all these levels. And the 144 here is sitting all the way down at 371.86. So it could absolutely move a lot lower before we see any kind of major support on either of these charts. Moving over to staples and discretionary, same thesis, fell dramatically. Looking at 72.50 still, took out that trend line. Next support down at this previous consolidation at that level. Discretionary, similar thesis, falling aggressively. Looking at 162 for potential support. Not quite there yet, short just a little bit on both of these. Moving over to the only sectors that were positive on the day, we got energy and oil and gas. They both gapped up through a big wick, still holding in this zone though, watching 87.37. Kind of looks like a bit of a topping formation, possibly setting up a lower high. You have bearish momentum on both charts, but still positive on the day, and you have to respect that. Both up around 1.2 to 1.3%. Moving over to breadth, obviously both of these continued to fall. Candle break at that level, continuation. 200 also moving lower. Did throw a wick to that 200 just for a moment and then broke down. Watching 49.76, potentially an area for support. You can see multiple tops in that area. Of course, both of these look super weak. 50 average, starting to get close to that lower percentages here between 20 and 30. In this range, you can see a couple of bottoms in there. Last bottom was down at 26.39. That catapulted us to that most recent high. So starting to get into this zone where we might find a little bit of support. 200, obviously not quite there yet. You can see these previous bottoms down in this 36 range. We also had some consolidation down at 43.55, and we're still sitting up around that 50 mark. So not quite there yet on the 200, but definitely getting close on the 50 in my opinion. Moving over to yields on the 2-year and the 10-year. 10-year here on the weekly chart. This is the culprit of the bearishness, in my opinion. Continues to rocket higher. We're seeing the reversion of the yield curve sitting above that 4.25 here on the 10-year. Continues to look super bullish. Not overbought yet. Bullish momentum. Looks like it's going higher. Looks like it's going to take out these previous highs from October of last year. 2-year yield holding in the zone, kind of topping at this previous top, chopping in the zone like we thought that it might. Again, allowing for that reversion with the 10-year yield going higher. Moving over to the dollar, still consolidating at this previous high. Did throw a wick down on the daily chart, and you can see that here. Looks like a hanging man candle. Wicked that 200. Momentum ticking towards bearish a little bit. 4-hour momentum, basically zero. Looking fairly interesting. If this starts to break down with some substantial momentum, that could pause the down move in equities. We're not seeing that quite yet, but we are seeing a little bit of a stall on this rally. Moving over to bonds on JNK and TLT, both of these selling off. TLT gapped down and then held, which is interesting. Possibly an island reversal type setup. You can see that kind of wick rejection. Definitely interesting, might be worth watching there. JNK, standard move down, took out that 91 level, and it does look more bearish now than it did yesterday. Moving over to the volatility indices, MOVE index rallied a little bit. If this breaks out here, that could be quite interesting, indicating more volatility and more bearishness to come. VIX continued higher as we kind of thought that it was going to. Momentum bullish, RSI still looking bullish. At this point, you want to see it at least hit the 1850 level. Got the 200 sitting at 1882, and I would expect to get into that zone before you see any kind of rejection on the VIX. Moving over to my accounts, you can see I continue to trade quite defensively. I took off that IWM position. I couldn't play any more defense with the IWM moving down so aggressively, and I can't do the same strategies in my IRA that I can in my taxable account. Taxable account, you can see I have a bunch of calls protecting these shares, and I continue to do quite well. I only lost $82 in that account, with the NASDAQ moving down more than 1% again, so protecting myself quite well, down about 0.01%. And the NASDAQ is down a little bit more after hours, so it's good to have these kind of protective positions. I have $1.70 on that 359 call, which protects me down to 357.30. And then I have these other positions protecting me a little bit further, and I can always roll them down and out if I need to. Overall, obviously, everything is still super bearish. Let me know down in the comment section what you thought of Walmart versus Target. Is Walmart going to take the lead forever, or will Target catch up at some point? Also, let me know what you think of the AAII survey. Are there still that many bulls out there, or are we just going to sell off forever? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading, and have a great day.